Hello guys, so today we are going to learn about inverse fair value gap. So if you guys haven't learned about fair value gaps, go and watch my previous videos so that you can understand. I've been saying this a lot, I guess. Yeah. Please always watch the previous video guys because it is a continuation. It is like a series. Okay, so you have to watch the previous ones to understand what is up the upcoming videos. Okay, so it is fine even if you are a profitable trader. You can watch from the start, doesn't matter. You can always refresh your memories, right? So yeah, just start learning, forget everything and start learning from the start. Okay, if you guys know about fair value gaps, then all good. So today we are going to talk about inverse fair value gaps. So it is basically a fair value gap which is disrespected. So just write it down. So in inverse fair value gap, or some people call it as IFVG, and fair value gap, it is also called as FVG. So it happens when the market disrespects the fair value gap. Okay, that is the first point you have to know. It happens when the fair value gap gets disrespected, and it shows change in order flow of the market. Basically, shows if we are gonna have a reversal or things like that. So it is another confluence which you can use for trading. So yes, let's just get into it. So there is bullish IFVG and bearish IFVG. So this is basically an FVG. See, this like the three candlestick pattern is called an FVG. So when the gap is not respected or a candle is closed above the gap. See, this green candle just got closed above the gap. So this was a uptrending mark. So this was a downtrending market and you got an IFVG, so it'll most probably become reverse and go to an uptrending market. So see this. So you get a fair value gap. Usually what happens, the market should come and tap here and go down. So in this time it will be like, you know, the market just does the opposite. So it will go up. Instead of coming down, it will go up. And then, what is this? Oh, okay. It'll go up. So it'll disrespect this fair value gap, go up, and maybe retest and go. Sometimes it won't even retest. Okay, guys, do not get this doubt. Like always, it won't come and retest. So it will just give just this much, and then it'll go up. So see the opposite, bearish FVG. So it was an uptrending market. You got a fair value gap over here. It should have done this if it was a fair value gap. But instead of that, it just went down. There is a candle closed below. I want you guys to know this. A candle should close below, not the wick. The candle should close below, like this. Or else you won't, it is not an IFVG, okay? Just because you saw a wick closing down doesn't mean it is an IFVG. So let me close and show you guys some live examples. So wait, what is this? I'll just yeah. Okay, guys. So let's see if there is an IFVG. Will take time, most probably, to find an IFVG. Oh, we got it over here. So yeah, what is this? A fair value gap, right? And what happened? From in this candle, it was not an IFVG, but by this candle closed below over here. See what happened? It just formed. IFVG formed. There was a retest, and then it was an uptrending market, and suddenly it became a downtrending market. You can find more IFVGs, guys. I mean, there will be some IFVGs which is disrespected. I mean, which is not proper as well. See, this was an IFVG, but it didn't work. You have to pair this with liquidity sweep, especially IFVG, guys. See, this was an IFVG, right? And then what happened over here? It got moved down, but it didn't respect. It went up after that. So this is what I'm telling you. You have to know previous things. You have to, pair the puzzles, the different puzzles. You have to keep it together so that you will get a proper setup. Just because you saw an IFVG doesn't mean it is going to be a downtrend, confirmed downtrend. Okay, guys, I hope you guys can understand these. So let's see one more. Let's go for a long. Yeah, see this. What happened over here? This was an IFVG, guys. See this. This was a fair value gap. It got disrespected and it started moving up. But just I'm just telling you, the order flow changed over here. Let's go for a better example, guys. Let's go for a better example. Let me find a better example. See this. Isn't this an FVG? IFVG? It is an IFVG. So it got tapped. See, this was not an IFVG. See this. It just got tapped and came up. By this big candle, the candle closed below. That is a sign of it became an IFVG, guys. Even this could be an IFVG. This is also an IFVG, but it didn't respect that much. Let's see. Let's see more example. Like you should pair it with liquidity sweep. Let's go for a liquidity sweep and find it out. Okay, this is a liquidity sweep, right? Maybe there will be an IFVG over here. Hmm. Actually, there is no IFVGs over here. Oh wait, you can consider this as a small FVG. Like you could consider. See, there is a small IFVG over here. This and this. Isn't this an IFVG? It is an IFVG. See, it just closed. This candle closed below it. See, this is also an IFVG. See, closed below, and then it came retest, went down. Let's see more. Let's see more examples. Let's go for a high so that you can find a liquidity sweep. There is no FVG over here, so this is not a good example. Okay, see this. No, this is also not an FVG because of the wick. So, okay, FVGs, if there is wicks, then you shouldn't consider this as an FVG. See, there's only small space in between. Hmm, very less IFVGs, guys. Let me see, guys. Wait for a moment. Hmm, wait, over here. Nope, we don't have an IFVG over there. Oh yeah, this is another example for an IFVG. See what happened? Close below, and the market just went down over here as well. See, this was an FVG, closed below, closed above, IFVG. This became an IFVG. This was an FVG. FVG is fair value gap if you guys don't understand. So closed above and then went up. More, more examples, guys. More examples. I'll make sure you guys understand what is IFVG. If I'm missing something, please forgive me. If I'm messing up, also please forgive me. Let me see. I think my. Ooh, wait. Huh. This is an IFVG. See this? This was an FVG, right? This candle got close below. So it became an IFVG. So basically, you should look for liquidity sweep and then IFVG. That is actually a good entry for for the reversal. You should always pair IFVGs with liquidity sweep, guys, or else most of the time it will be a failure. So you can see more IFVGs over there, but not all. But whatever is there after a liquidity sweep, it will be a proper IFVG. Over here, it most probably became an IFVG. Yeah, see, this is a liquidity sweep, right? And then what happened? There was an FVG before the liquidity sweep, and then it just got close below. So You could have entered over here for shorts like this. You could have kept your stop loss over here because it's a recent high and targeted these lows. This is a proper low. This is also a low, proper low. See, it got your trade got proper target. See, it came up, but it came down again. See, let's see more. Let's see more, guys. This is how the market. See, this is a liquidity sweep over here. So, see, there is an FVG over here. See, this was a liquidity sweep. Then there's an FVG. Always pair IFVG. Make sure you write it down. Always pair IFVGs after a liquidity sweep. Do not trade IFVGs if you don't see a liquidity sweep. Okay, guys. Hope you guys can understand. Like, please note it down. I don't know where the things are. So I don't want you guys to be like, oh, Alex told this. Alex was like, when you see IFVG, go and trade. Like it is showing a reversal. Don't be like that. Just see a liquidity sweep and then go and trade, guys. Don't be fools. Just be smart about this. Just see the market, understand. See over here. Isn't this an FVG? Isn't this an FVG? This was a liquidity sweep. See, there was a liquidity sweep happening. These are all an FVG. This is also an FVG because this candles will be combined if you go for a higher time frame. These are all FVGs. I mean, you can go for lower time. This is an IFVG, right? Lower time frame IFVG, 5 minute time frame IFVG. See, and then what happened? Ah, what is happening? See, you could have entered over here. Wait, you could have, after seeing it, you could have entered over here. Your stop loss will be over on top of this high, and then you could have targeted this low. Which low? I don't know if you got the target, but either this low. Let's see if the target actually got hit. Guys, I think wait, we keep the target, yeah. Over here. Nah, it just barely missed, guys. See this? Whoever took a trade out of IFVG, I feel bad for them. Like I literally, unless they actually kept it a bit more high, they didn't get the target. Oh wait. They actually got the target. See. They did, and I was initially planning for this rate. Yeah, it got hit as well. See, so yeah, wait for it. It will come. I thought it might not have hit the target with in a small number of points, but yeah. See, there's a liquidity sweep, so most probably there will be an IFVG. If there is an FVG over here, I don't think so. Yeah, there is no FVGs over here. Nope, there is no FVG. This is a liquidity sweep, right? It swept this liquidity, so nah, this is not a major liquidity sweep. Mm, this is a liquidity sweep. Yeah, this is a liquidity sweep. See this? Isn't this an FVG? Yep. And then what happened? Market just went down and it came and retested also. So you could have kept a sell limit order over here. You could have entered like this and low. Ideally, you will have targeted over here. There is still a 1:3 trade. Is this a liquidity sweep? Yes, it is a liquidity sweep. So what happened? There's a fair value gap over here. Isn't this a fair value gap? What happened over here? A candle just closed above and then it came back to retest and then it went up. So your trade would have been a long over here. Stop loss will be over here and take profit will be this high. So it is a 1 is to 2.7. So you can actually trade with just one confluence, but you have to master that, guys. And liquidity is really important. Whatever you do, pair it with liquidity because liquidity moves the market. So there is a liquidity sweep over here also, I guess. Yeah, this is the last for my basic plan. So yeah, this was a liquidity. This was a liquidity. It got swept. This is a liquidity. It got swept. Came up. FVG over here. It disrespected. Formed an IFVG. We enter short. Kept the stop loss over here. Take profit to the low over here or here. This is the low. This I would have targeted this low, or mainly I would have targeted this low based off the liquidity. So what is the wait? What is the trade? What is wrong with my mouse, guys? Oh wait, something is off. Yeah, so it was a 1 is to 3.65 trade. So I hope you guys understood. I understood this. So whatever graphs you take, I've told you, I mostly use Euro USD, guys. But even in XA USD, you will find IF, you know, I'll just delete all the unnecessary stuffs. We need to pair it with liquidity sweep. So this was a liquidity sweep. This was a fair value gap. And see, it got tapped into, went down. So you should have kept your stop loss over here. You would have entered over here. Your stop loss would be over here. Your TP should be over here. I would have gone for this low most probably. Or you can actually let me see if it actually went and hit the other one. I've gone for this. Okay, it's still. Oh yeah, it did go and hit that. See, this is what I'm telling guys. See, this is also a liquidity sweep, right? This high liquidity, liquidity, liquidity. It got swept. It got swept over here. There's an FVG over here. After this FVG got closed, or you could have traded off of this FVG also. See, there is two FVGs which came. So uh, yeah, this candle was the candle. So this is not a good entry because it would have already gone a lot down. Let's go for a lower one. Where is the low, guys? Okay, this. mm, okay, you could have gone for this also. See, this is an FVG. FVG got closed above till here. It closed above over here, so you could have entered. You would have entered somewhere over here, most likely, and stop loss will be. I would have gone and kept my stop loss under this FVG because that is where my trading rule setup would have failed me. I would have targeted this high. See, 1 is to 2.21. So 1 is to whatever 1 is to 2. From 1 is to 2, you can take any trade, okay? Less than that, do not take any trade. If you find a setup which is less giving less risk to reward ratio, because we need something out of whatever money we risk, right? So better not to trade every time. See, this is also an IFVG, three candlestick patterns. So the space in between, this is a liquidity sweep. So see this. This was a liquidity. Do not trade off the wick. This was the confirmation for us. This candle was the confirmation. So you go keep. You would have entered over here, and your stop loss will be over on top of this, and your take profit. I would have kept it over here. You could have gone here also, but ideally, I would have gone for only this because I don't want to risk too much. What if it went up? See what happened? Boom! We got hit. You could have actually kept the stop loss over, I mean, take profit over here also. Over here, okay. Over here it didn't work. See, this is what I was telling. Like I would have gone for a area like this. Or this is also fine. This one is also fine. This low is also fine. That low was the low which got swept. So if you guys have would have kept your target over here, then you guys would have been losing a trade over here. Yeah, you would have lost a trade. See, let's go and check another liquidity sweep, guys. One more liquidity sweep for gold. Isn't this a liquidity sweep? See, this was a high. It took the liquidity out. And then, is there a fair value gap? Yep, this is a fair value gap. We didn't get an. Oh, okay. If you traded IFVG over here, then you would have messed it up. But see, this is what I was telling. Not a single strategy is 100% having a win. So you could have kept it over here and then targeted over this low, or this is too far out. I don't know if they actually got hit. If you would have gone for this, I don't know. But yeah, don't go for too far, like 1:9 or something. I mean, unless you are so confident of the trade. Did it hit? Oh yeah, it did hit. It did hit 1:9. So you could have gotten a 1:9 trade, guys. See how much. And if you would have taken a trade over here, this is what I meant. You would have lost this trade. Not every time. Always confirm. You know, enter a trade, IFVG trade with liquidity. That is a must. That is a rule I'm giving you. Write it down. Always enter inside an IFVG trade with liquidity sweep. So what we would have done is we would have entered over here most probably and stop loss over here. We would have lost, but we'll take that loss, guys. Not all the trade. You should, if you are becoming a trader, you should be ready to go on a losing streak in the starting, or else you guys cannot make it in the market, I guess. Even I'm still learning. I'm not giving up. I won't give up because I basically started this YouTube for that, so that whenever I feel like giving up, I'll go back and see the video. So yeah, I hope you guys can. I hope you guys understood. This is enough example for IFVGs. So I am gonna stop the video. Thank you guys, and make sure you learn everything properly. And yeah, that's all. Bye bye.